Norfolk's rental market is exploding, but if you're not paying attention, you're about to miss the biggest opportunity of the decade. In today's video, we're cutting through the noise to reveal exactly why Norfolk's multifamily market is turning heads. From soaring rent prices to a construction boom, this region is primed for massive returns. And if you're serious about investing or staying ahead in the real estate market, this is the data you can't afford to ignore. So let's break down the numbers and show you why Norfolk is your next big move. Overview. So Norfolk's multifamily market remains strong with continued demand throughout 2024, though new supply has kept vacancy rates higher than the pre-pandemic levels. Over the past 12 months, the market delivered 2,300 units, absorbing 2,800 units, which led to a vacancy around 5.9%. While this is below the national average of 7.8, it signals the market is still adjusting to an influx of new developments. Now, rent growth has slowed considerably to 2.5% over the past 12 months, down from the 11% annual growth seen over the previous 3 years. Now, developers have maintained a steady pipeline, delivering around 1,500 units annually since 2020. Now, Norfolk is set to see another 1,700 units come online by year's end, which is expected to sustain moderate rent growth. Vacancy. Norfolk's multifamily vacancy sits at 5.9%, below the national average thanks to a more stable balance between supply and demand. The first 2 quarters of 2024 saw nearly 800 units absorbed, continuing the positive trend from 2023, while demand for the 4 to 5 star luxury apartments remains very strong, driving much of the absorption. The 3-star properties have also fared well. In contrast, demand for workforce housing has remained more sluggish. The 5.9% vacancy rate mirrors the region's 10-year average, which indicates a healthy market overall. With continued steady absorption rates and moderate new deliveries, Norfolk's vacancy is expected to remain stable. Rent growth in Norfolk has slowed significantly, though it still outpaces many other regions. The past 12 months saw asking rents grow by 2.5%, with the average rent now standing at $1,500 per month. This is down from the 16% growth rate seen between 2020 and 2021, when demand surged. Norfolk remains an affordable market compared to many nearby metros like Washington, D.C., Raleigh, with rents, the 4 to 5 properties are averaging about $1,800 per month. So the slowdown in rent growth reflects a stabilization of the market, and the trend is expected to continue with steady demand for new units and a growing population. Construction. Norfolk's multifamily construction pipeline has remained consistent over the years, with about 2,000 units under construction at any given time since 2015. Currently, there are 1,700 units underway, signaling continued interest in the market. Notable projects include the Gravity at 400, a 273-unit property in downtown Norfolk, and the Fusion at Neon, which is set to deliver 281 units in Virginia Beach, which also has significant new development, will add several hundred units by the end of 2024. This steady pace of construction helps keep supply in line with demand, contributing to Norfolk's relatively stable vacancy rates and rent growth. Sales activity in Norfolk's multifamily market has slowed compared to the record highs of 21 and 2022. The 12-month trailing sales volume shows decreased deal flow due to higher tightening lending conditions and economic uncertainty. However, private and out-of-market investors have remained active, focusing on acquiring luxury apartment assets in areas like Norfolk City and Chesapeake. But recent notable transactions include the $21.5 million sale of the James on the Merrimack, a 125-unit community. With cap rates hovering in the mid-sixes, Norfolk remains an attractive option for investors looking for steady returns in a stable market. Economy. Norfolk's economy has continued to recover from the impacts of the pandemic, with employment growth outpacing national trends at 2.4% compared to the 1.8% nationally. The industrial sector has been a key driver, growing by 4.1% over the past year. Major employers like Serco and Berkshire Hathaway Home Services have expanded in the region, boosting office-using employment as well. Additionally, the Port of Virginia's continued growth supports the region's position as a logistics hub. With ongoing investments in infrastructure and a growing workforce, Norfolk's economy is well positioned for sustained growth. I'm Justin, multifamily broker here in Southern Virginia, and if you have any questions or want more data or want to buy or sell or just chat about multifamily and where we see things going, give me a call. Thanks for watching.